Hello everyone, I'm Rocky Yang with your Market 360 Week in Review for the week of January 27th, 2012. Taking a look at our milk price for the week, we really did see some quiet trade and also some consolidation taking place throughout the week. Cheese was relatively flat and stagnant, so it didn't really add any support or resistance coming from that end of it. So taking a look at our front month contract, soon to come off the board next week, wasn't changed for the week. Once we get into February, soon to be the front month contract, did see some gains there, up 25 cents. Once we got past February, it really was once again some mixed trading, really consolidation taking place throughout the week. You can see prices up anywhere from 9 cents down to 15 cents in June. So once again, looking at our deferred months, also a similar story there. Really mixed, but we did see a little bit more selling pressure for these deferred months. You can see July through September. July being hardest hit there, down 10 cents for the week. September did see a little bit of buying interest, up 5 cents for the week, up a nickel. I'm also looking at that fourth quarter. Did see some selling interest there as well, down anywhere from 2 to 10 cents. So now looking at our cheese prices throughout the week, you can see did see blocks and barrels move in opposite directions. So blocks were up just a half a cent, finishing the week at 151. Barrels did see a little bit of selling pressure, down 3/4 cents, finishing below that 150 mark. Now taking a closer look at that block per hour average on a weekly chart. So we did move lower for the third straight week in a row. The thing to note there, we were just down just over 1 cent compared to last week being down close to 8 cents. So overall it does feel like we could be bottoming out in this 150 range. Another thing to note here today, we did have some very significant buying interest from a number of traders. We actually saw 6 blocks trade hands just from today's trade on Friday. Also 20 barrels exchanged hands as well. So that brings the total there, 26 carloads traded hands just for today, just being Friday. So definitely some buying interest there in this 150 range. Taking a look at our March milk on a daily chart, and a few takeaways here. The first one being just how significant the sell-off has been. You can see on the charts we did run out of gas right at that $18 level. Since then have been pretty much nothing but lower. You can see we did really find support in that 1645 to 1650 range on the bottom end, so that's the first thing to take note of. The second thing is that we have been in this tight trading range over the past week and a half since bottoming out. So to the downside, we have definitely found support in that 1650 range. To the upside, we have found pretty heavy resistance right at that $16.95 to $17 mark. You can see on the chart we have really tested that, but thus far haven't been able to cross that bridge and break back over that $17 mark. Taking another look at the December milk production report, which was released on Monday, just to dive in a little deeper and look at those numbers there. Once again, milk production was up 4.7% compared to November, also up 2.5% compared to last year. So it is pretty significant gains, especially that 2.5% compared to last year. Also looking at the milk cows, we were up 12,000 head, which is the biggest gain we've seen for quite a while on a month-to-month basis. Also up 80,000 head for the year. Looking at milk per cow, we were up 78 pounds compared to November, also up 29 pounds compared to last year. So take a closer look at those numbers, looking at December cows on farm, and just how we've trended here over the last few years, as well as looking at a monthly basis. So you can see going back to 2009, just how significantly we declined throughout the year with those lower prices. Going a little bit earlier here, 2010, overall was pretty steady. We did see the herd increase moderately throughout the year, and then going back to this last year, 2011, really similar story there. You could see pretty significant increases in the first half of the year, as you can see in those March, April months. Going into June as well, we did really flatten out throughout the summer months going into fall. In this last report was a pretty significant increase, as I just noted before, up 12,000 head. So once again, as you can see, up 80,000 head from last year as well, up from 2010. So really need to monitor this and how we trend into this next year with the herd size continuing to grow. We have been keeping a close eye on the weekly cold storage numbers when we look at cheese, just because we have been building inventories for quite some time. So we'll take a closer look at that on the charts here. Going back to November, you can see those cheese cold storage inventories have been building for 9 weeks in a row actually, which equates to about 8.3% in those cold storage inventories. So we have seen some pretty significant increases going back to November. In the latest report, which came out this week, we did see that first decline, as you can see here on the chart, was down 2.5%. So overall, very supportive that we did see those numbers decline for the first time in 9 weeks. So looking ahead to next week, just a few things on our radar. The first one being our December dairy products report is due to come out on Wednesday, February 1st, so that will give us the latest production numbers when we look at the cheese market as well as dry whey and butter. So it will be interesting to see how those numbers fared over the month of December. Also, our January contract will be coming off the board, so we'll get the final settlement price there Friday, February 3rd. As always, if you have any questions or comments, please contact your advisor. Thanks for watching. We'll see you on Monday.